In this video I will backtest a simple strategy 100 times on the British pound versus Japanese yen 15-minute chart. First I will show you the chart setup and the rules for longs and shorts. Then I will backtest the strategy using 1% risk per trade and show you the real results with the equity curve and the strategy ranking sheet. Finally, I will share my opinions regarding this strategy and a few optimization tips. Let's get right into it. First, let's see the chart setup with the indicators. For this strategy, go to tradingview.com and open up the GBPJPY 15-minute chart. Once you got that, head over to the Indicators tab and let's add our indicators. Our first indicator is going to be the no sure thing, and this will give us our entry signals. The second indicator is the corrected moving average. This will be our trend filter. The third one is going to be the Waddah Attar explosion. This one. This will make sure that we have enough volume when we enter into a trade. And the last indicator is a momentum filter, and it is going to be the average directional index or the ADX. This one. Okay, let's modify a few settings and then see the strategy. First, we have to change a few settings in the corrected moving average, so open up its settings and go into the Inputs tab and set the 35 length to 200. After that, switch to the style settings, untick the SMA and the plots background. With that, you have set up your corrected moving average. With the no sure thing, we won't change any settings, so leave it as it is. By the way, these are my default settings. With the Waddah Attar, we won't change any of the parameters, but switch to the Styles tab and make this dead zone line a bit more visible. So color it white and change its line style to simple line. Finally, with the ADX indicator, we have to put up a horizontal line at the 20 level, as we don't want to enter into any trades when the ADX is below the 20 line. And with that, you have set up all of your indicators. Now let's see the rules for longs and shorts. Okay, here is a potential long entry. The rules for taking a long position are the following. First, we need to have the price trading above this corrected moving average. After that, we need to see the green line crossing above the red line. And as you can see, that just happened right here. After that, we need to have the Waddah Attar bar above all of those lines. If I zoom in, you can see that the Waddah Attar line is above the white line and the orange line also. And finally, we need to have the ADX line, which is this red line, above the 20 level, which is this purple line. And as you can see, all of those criteria are met on this candle, so we can enter into a long position. The entry level will be at the close of this signal candle, and the stop loss will be at the lowest point of the last 8 candles. So for that, count back 8 candles. 1, 2, 3, 4, 5, 6, 7, and 8. And find the lowest point. As you can see, the lowest point will be right here on this candle. Let's place our stop loss just below it. And the take profit level will be at a 1 to 2.5 risk to reward ratio level. Right around there. If we extend this position, you can see that it was a winner. Let's see one more long example and then I will show you the rules for short entries. Here is another potential long entry. First, the price needs to be trading above the corrected moving average. Then we need to have a cross up on the no sure thing. The Waddah Attar needs to be above both of those lines. And the ADX needs to be above the 20 level. All of the criteria are met on this candle, so we can enter into a long position. Entry level will be at the close of this candle. The stop loss goes to the lowest point of the last 8 candles, so count back 8 candles. 1, 2, 3, 4, 5, 6, 7, and 8. The lowest point will be on this candle. And the take profit will be a 1 to 2.5 risk to reward ratio. Right there. As you can see, this trade was a loser. Okay, now let's see the rules for short entries. The rules for a short entry are the following. First, the price needs to be trading under this corrected moving average. Then we need to have a cross down on the no-share thing. That means that the green line goes under the red line. And as you can see, that happens right there. After that, the Waddah Attar bar needs to be above both of those lines. As you can see, it is above. And finally, the ADX line needs to be above the 20 level, which you can see is well above. All of the criteria are met for this short entry, so we can place a short position right at the close of this candle. Stop loss will go to the highest point of the last 8 candles, so count back 8 candles. 1, 2, 3, 4, 5, 6, 7, 8. And the highest point is right here. And the take profit level is going to be a 1 to 2.5 risk to reward ratio level. Right around here. Okay, let's see how this trade plays out. As you can see, this trade just hit its take profit level right there. So this is a winning trade. And now let's see the 100 trade backtest, then I will show you the results with the equity curve and the strategy ranking sheet, and finally I will share a few optimization tips and my opinion on this strategy. If you like this video, don't forget to drop a like, subscribe and turn on the notification bell so you won't miss any of my upcoming content. If you don't know us or what we do here at TradeSmart, we are backtesting rules-based objective trading strategies 100 times to see which ones are the best and has potential. After we find a good one, we code it into a TradingView trading script and release them to our Patreon members. We also optimize the scripts to bring out the best results while aiming to keep them steadily growing and at a safe risk level. If you become one of our Patreon supporters, you can get access to all of our trading scripts, optimizations, and we can also help you set up our trading scripts as a trading bot. Besides that, you can talk to anyone on our team, give suggestions moving forward, and get an insight into our upcoming projects. You can find the link to our Patreon down in the description. Now let's see the results and the strategy ranking sheet. After 100 trades on the GBPJPY 50-minute chart with a 1 to 2.5 risk to reward ratio, this strategy has made 40% net profit with a 1.67 profit factor. Daily profit in percentage is 0.24%. And the results were achieved within 165 trading days. Let's take a look at the equity curve, then the strategy ranking sheet, and finally I will share my thoughts on this strategy and some optimization tips. Looking at the equity curve, you can see that the strategy had a slow start and a relatively big drawdown. But then, around the 37th trade, it quickly picked up and rallied up until the 40% net profit mark. Now let's see how good this strategy is compared to all the strategies I have tested so far. On the strategy ranking sheet based on net profit, this strategy has taken the 6th place, which puts it to the top 10% of the tested strategies. On the other strategy ranking sheet, which is based on daily profit in percentage, the 50-minute GBPJPY strategy ranks a bit lower at the 18th place with 0.24% daily profit in percentage. Finally, let me share my thoughts on this strategy and a few optimization tips. In my opinion, the equity curve can tell a lot about the strategy. This strategy's equity curve is good, but not the best I've seen. After the 37th trade, it has a very nice uptrend, which is promising on its own, but before that it had a big drawdown and a sideways period, which are not good signs. Also, we have to keep in mind that this backtest was performed on only 100 trades, so it is very likely that it can have a different equity curve and it can be much worse. Another bad sign is the number of losing trades in a row, which is 13. This means that at some point in the backtest there were a 30% drawdown, which is out of my preferred tolerance of 10%. Talking about the good parts, the strategy made 40% on the account and had a 1.67 profit factor, which is really good. So altogether, I would not recommend trading this strategy in its current state. But after changing some parameters, adding a few extra rules, and playing around with the trade management, it could become a great strategy. Of course, this is not financial advice, and I am not a financial advisor. Always do your own research. But what optimizations do I recommend? The first thing I would always do is to play around with the stop loss placement and the risk to reward ratio. What I've seen during the backtest is that this strategy sometimes has ridiculously big stop losses due to swing low, swing high stop loss placements. Trades with these big stop losses are usually losers. So I would recommend trying out an ATR based stop loss and finding a max limit value for the stop loss distance. I also saw a lot of trades that have gone into the profitable range but then turned around. A solution for this problem is to either use a tighter profit target or to have multiple exit points. For example, exit 50% of the position at a 1-to-1 risk-to-reward ratio level, or use a trailing stop loss. Using a trailing stop loss would not only give an open upside for the trade, but also takes care of cutting losers quickly, which is an important factor in trading. If you are interested in better strategies than this, and the ones I actually liked, check out this playlist. And with that said, thank you all for watching, have an amazing day, don't forget to drop a like and subscribe, and see you in the next video.